Ladies and gentlemen, we are going to be talking about the one, the only Nvidia, one of the top AI, artificial intelligence companies to watch for 2023 by a whole bunch of analysts. We're going to be talking about should you buy this stock. This is going to be a total review of Nvidia and giving you guys my honest opinion about this company. We're going to be talking about the fundamentals. We're going to be talking about technical analysis, and we're going to be talking about the best approach, the best strategy for investing into this company. So I hope you guys all enjoy it. If you guys get anything in value out of this video, hit that like button, subscribe. If you guys are new to the channel, we talk about everything money, stocks, money management, trading, investing, all that good stuff. So if you find that interesting, subscribe and join the team. So guys, let's jump into it. Let's go. All right, so for those of you that don't know what Nvidia is one of the leaders of AI software, and on top of it, they are a leader of computer parts, graphics cards, chips, all that good stuff. Now the company actually makes the majority of their money off of selling computer parts, so that's going to be like graphics cards, chips, stuff like that. Stuff that actually makes and powers computers. Now, year to date, the company is up well over 216%. So they're outperforming the S&P 500, the Dow Jones, the NASDAQ, all that good stuff, all those top 3 indexes. This company is outperforming. Now, you may be saying, Carter, why is that? Well, as of right now, there is a huge amount of buying pressure among tech stocks and among AI companies. We've seen companies like Big Bear. We've even seen companies like Google, Microsoft, even Tesla really just explode. Any company with some sort of software, data, AI presence has been getting a ton of buying pressure this year. Now, the reason why that is because AI is rated to grow near and around 37% per year for the next 10 years. So if there's a way that you guys can make money off it, there's going to be a lot of investors looking for those leaders. Now, looking at Nvidia's fundamentals, they're decent. We really haven't seen a huge explosion off of the revenue or the margin or anything like that. We've seen some increases, we've seen some decreases, we've seen some beat earnings, but overall their fundamentals are decent at best. Now, one of the most important things when evaluating a company is the cash on hand. Cash on hand is super important because if the company ever goes through a hard time, you want to make sure they have enough cash on hand to continue to pay and invest inside the business. Now, Nvidia has about $15 billion in cash, which is a lot of money compared to their long-term debt at $9 billion, so they have more cash on hand than debt. So if they ever go through a hard time, they can easily pay off that debt and continue to grow and invest inside the business to grow it larger. Also, a lot of people think that right now Nvidia is overvalued or whatever you want to call it because of something called the earnings per share. Now, this is a way a lot of conservative investors look at any time a company is over like a 30 or 40 or 50 on their earnings per share. They consider it overvalued. And as a conservative investor, I completely get where you're coming from. But as of right now, Nvidia's EPS, also known as earnings per share, is 236%. So I know you're saying right now, Carter, that's way too high to invest in. Why would you ever do that? Hey, when Amazon was trading for $200 a share, their earnings per share was over $1,500. At the time, people thought this company is way overvalued. Why would you pay that premium? Why would you invest into this company? It's way too risky. The same thing with Tesla. When Tesla was trading near and around $75 a share, the EPS was near and around $700 at the time. This company's way overvalued. Why would you invest in it? Looking back, years later, you'd have been foolish not to invest in it. I have the very, very similar approach with Nvidia. The company carries so much potential. They're heavily invested into all the top growing sectors: AI, software, data, computer parts, AI chips. I just think that right now this is a no-brainer investment, but let's see what the analysts state. Now, the average analyst is giving this a price target as of this year at $486 per share. That's a return of about 6%, which is decent. But looking out 2 to 3 years, you guys will see just how crazy these price target returns can get. Some at $600, $700 a share. So to answer that question of should you invest into Nvidia, for me, I am. I think the company is worth the investment, but on the flip side, it is a higher risk, higher return play. So here's the best approach. One, dollar cost average. average. What that means is instead of putting up a one lump sum investment, what you're gonna do is invest consistently rather than just one lump sum and invest and forget. What you're gonna do is invest consistently, whether it's once a week, once a month. So what you do is you get a good average price for your share because you're investing consistently